Welcome back to the channel. If you want to do quarterly tax for your small business, here are the steps you need to follow right now. Step number 1, you got to know who is required to pay in general, because the thing is that there are some special categories of small businesses that have to pay. So who is really required to file quarterly taxes? If you work as a self-employed individual or a small business owner, you likely need to pay quarterly estimated taxes. You are typically considered self-employed if you work as an independent contractor, a sole proprietor, a member of a partnership that conducts business such as an LLC, a person who runs a business as your own, including part-time. Okay, so who must submit quarterly tax returns? So those are the 4 categories. And so who should actually pay? It really depends. You have to make quarterly estimated tax payments if you expect to owe more than $1,000 after subtracting withholding and tax credits when filing your return, or you expect your withholding and tax credit to be less than 90% of your estimated tax liability for the current tax year, or 100% of the previous year's tax liability, assuming it covers all 12 months of the calendar year. So this is really important. So these are commonly referred to as safe harbor rules. So the 100% requirement increases to 110% if your AGI, your adjusted gross income, exceeds $150,000, $75,000 if you are married and filing separately. So one exception that applies to individuals, it means that if you earn at least 2/3 of your income from farming or fishing, then the exception really applies. The requirement is to pay in 2/3 of your current tax year or 100% of your prior year tax. Also, there is only one estimated tax payment date, January 15th of the following year. Additionally, if you file and pay in full by March 1st, then estimated tax payments are not required. Okay, so paying your taxes quarterly can avoid the cash crunch you might face come tax time. So paying in quarterly installments can make paying your bill far easier than one lump sum payment, especially if you have underestimated your taxes due. Very important. Okay, so I just wanted to lay the foundation of the conversation so you have a clear idea what you have to do. Now the thing here is that who is actually exempt from quarterly tax returns? Well, if you're not in the 4 categories that I listed earlier, then you're not in the you don't have to file quarterly tax returns. Very important. Okay. And one thing I want to say before closing on this section is that Form W-4 can be utilized to file quarterly taxes by the employer on behalf of the employee. So step number 1, you got to know who is required to pay in general. Step number 2, you need to determine if you have to pay estimated taxes. This is really important. Now, the first step really, when it comes to paying your estimated taxes, is you need to figure out whether you need to file quarterly taxes in the first place. The types of income that may require you to make quarterly payments include self-employment income from a business you own or freelance work, contract work including gig work or any job where you are not an employee with taxes withheld from your paycheck. You have dividends, you have capital gains, you have distributions from a retirement account, W-2 wages, if you did not have enough tax taken out of your paycheck. Okay, I want to say something real quick about the dividends. Even if the dividends are reinvested, you still need to pay taxes on them, because some people have their dividends where they're not getting the cash, they're having automatic reinvestments of those dividends. You still need to pay income on them. Now, one thing I want to say here is that if you have to think about your specific situation, okay, and so the IRS does not require you to make quarterly payments if you had no tax liability for the prior year, you are a U.S. citizen or resident for the whole year, and your prior tax year covered a 12-month period. Okay, so this is really cool, and you can also skip estimated taxes and pay what you owe on April 15th if the taxes you owe are less than $1,000. Another way to avoid estimated tax, even when you do gig or contract work, is through increased withholding. If you work a combo of freelance gigs and jobs that withhold taxes, you can boost your withholding to cover what you will owe for your freelance work. And couples that file jointly can also use this technique if one spouse has a paycheck and the other is self-employed. Okay, this is really important. Now, one thing I want to say here is that most people who work for wages prefer to have their employers withhold their taxes from their paycheck, but it can be hard to know if you are having enough withheld, particularly if you have more than one job. So the IRS actually has they have a great tool. It's called the tax withholding estimator. The tool helps you figure out what you will owe based on your filing status, number of dependents, number of jobs, and other factors. So go to the IRS website, or you just go to Google and type IRS tax withholding estimator, and you have the tool right there. Step number 3, you have to determine when to pay. Boss, I just want to quickly remind you that we are speaking about how to do quarterly taxes for your small business. So step number 3, you need to determine when to pay. So timing is really important. So if you need to pay quarterly taxes, it's important to pay on time to avoid late payment penalties and interest. So the 4 quarterly tax payments are not evenly spaced. So estimated tax payments are due as follows. So you have from January 1st to March 3rd, the payment due is April 15th. From April 1st to May 31st, the payment is due June 15th. From June 1st to August 31st, the payment is due September 15th. And from June 1st to August 31st, the payment is due September 15th. Okay, and from September 1st to December 31st, the payment is due January 15th of the following year. And when any of those due dates falls on a weekend or a federal holiday, your taxes will be due the following day. If you pay by check, your check just needs to be postmarked by the due date. So this is really important. Now, according to the IRS, special rules apply to farmers and fishermen. Okay, so if you're in that category, you can just let us know, or you can just go to the IRS website. Not a problem. Now, if you want to simplify making quarterly tax payments, well, it's really, you have to automate things. Okay, you want to actually understand that you can create an estimated tax account. This can be an estimated taxes account where you can keep a certain amount segregated from the rest of the funds. So this will help you organize your financial situation, and also help you recognize the money for your taxes and the one for your operational expenses. And apart from this, the following measures can guide you in simplifying your quarterly tax payments. For example, try to hire an expert or an accountant. This can be an EA, an enrolled agent. It can be a tax attorney. It can be a CPA, a certified public accountant. So this can actually help you in terms of knowing when to pay, but also planning your tax situation. You can also implement accounting software. So we have done a show on small business tax software, so you are able to actually plan your tax situation in advance. So this is really important. So besides doing your homework by gathering accurate numbers in your financial statements, you may also implement and invest in efficient accounting software. This is really good. This software can help you manage your expenses and also calculate your estimated taxes, and also save you a lot of time and money. Step number 4, boss, you got to estimate your tax liability. So this is really important. So once you have determined that you are required to pay quarterly taxes and when you need to pay them, it is time to calculate how much you will owe. Very important. So the best way to calculate your quarterly taxes is by using an estimate of your total expected income for the year. If you expect to earn the same as you did last year, then start with the previous year's total. However, if your business is just starting out, or your expected income is wildly different than what it was last year, you may need to make more careful calculations based on your quarterly income. Okay, so here are the basic steps to follow if you want to have a precise measure of your quarterly tax due. So you want to calculate your total expected income. You want to apply tax deduction to get your AGI, your adjusted gross income. You want to multiply your AGI by the relevant tax rate to find your estimated income tax owed. And remember that your total expected income from step 1, you want to use that expected income to also estimate the self-employment taxes you will owe for Social Security and Medicare. And you want to add together your estimated tax owed and your estimated self-employment taxes. So that's your estimated tax for the year, not for the quarter, for the year. So you want to take that estimated tax for the year and you want to divide it by 4 for the 4 quarters of the year. So that's actually your quarterly tax amount. Okay, so what I want to say here is that you can use IRS Form 1040-ES to figure out your estimated quarterly tax payments, and corporations can rely on IRS Form 1120-W, estimated tax for corporations, to calculate their quarterly taxes. So it's really important to have a clear idea where you find yourself. Are you an LLC? Are you a self-employed? Let's say a Schedule C kind of a filer. Are you an LLC? Are you a C corp? Are you an S corp? Are you a partnership? All those things are very important. And one thing I also want to say here is that you got to be in a situation where not only you can plan your taxes way in advance, but you also have to be in a situation where you have enough funds, enough money to pay for whatever liabilities you may end up having. So it's all about planning. So when we talk about taxes, especially small business taxes, you have to actually invest some money when it comes to planning. Very important. Step number 5, boss, you got to decide how you want to pay. By the way, I just want to remind you that today's topic, we're speaking about how to do quarterly taxes for a small business. Very important, okay? So decide how you want to pay. Now, you know how much you will pay, so it's time to get to work entering that payment. So the IRS gives you several options on how to pay. You can pay for free with a bank account transfer from your bank account or use a credit card for a fee. The systems used to pay for free are called Direct Pay, as well as Electronic Federal Tax Payment System, EFTPS, which requires enrollment. You just need some basic information about yourself and info from your most recent. Basically, the thing is, you just gotta talk about your most recent return. Very important. So you need those those pieces of information to complete the payment process. So you know yourself and your last return. You can schedule these payments in advance, so you never miss a quarterly payment deadline. Okay, so that's option number 1. You can send an estimated payments in the mail along with Form 1040-ES. Option number 2. Number 3, you can pay on your mobile device using the IRS To Go app. Third option number 4, you can also pay over the phone. Okay, so just keep in mind that paying with a credit card incurs a fee. So it's a better idea to use Direct Pay instead of a debit card, but there are some situations where the fee is worthwhile on a credit card. So if you are working on a big sign-up bonus on a new credit card, for example, you can pay your taxes with your card and it will count as a purchase towards the bonus. However, unless you have some good rewards coming your way, the fee is higher than the rewards you'll get back. Okay, so pay1040.com is currently the lowest credit card processor to pay your taxes. So one thing I want to say here is that you have to actually plan those things in advance. When we talk about tax planning, we're also talking about planning your payments, okay? Because this will affect your business cash flows. It's very important. I mean, tax payment, this is a cash flow. So you want to make sure that you have enough cash when it's time to pay your taxes, your quarterly taxes. That's number 1. Number 2, that after you paid your quarterly taxes, the business is not just like lethargic. It's not just sitting there not having any money. You have to plan those things, okay? Very important. And another thing I want to say here is that when we talk about deciding how you want to pay, it really depends on what really works for you. Number 6, boss. We are actually talking now about you making sure that your payment is reflected on irs.gov. See, the whole thing here is that you have spent a lot of time doing your taxes. You have done some planning. You have actually allocated the cash flows that you need, the cash that you need to pay your taxes. It's important to make sure that the IRS acknowledges your payment and that you are not late, because being late or not filing at all carries consequences. Okay, and so. Did you know that the IRS has a website where you can view information about prior year taxes, balances due, and payments on your account? This is really great. So you want to head over to the IRS website to view your tax account. And one thing I want to say here is that while this step is optional, it's not a bad idea to log in the following day to make sure your payments is reflected properly. Okay, very important. So it's important to understand that you want to write down, before you put your quarterly estimated taxes completely behind you, take a moment to write down the next due date so you can stay on track. Okay, and keep in mind that you may need to make estimated tax payments to your state. So be sure to look up your state's legislations, your state guidelines rather, for calculating and making your estimated payments, as well as the due dates, and because this may actually vary from the IRS's. So what I'm trying to say here is what? So when you make your payments, make sure that those are reflected, and make sure that you also make sure that the payments go also to the state authorities, and those are also reflected. Okay, so that's the bottom line. And one thing I want to say here is that, as important as quarterly taxes are, the most important thing is to file your yearly return on time. Okay, because the worst thing in tax, just from a standpoint of compliance, is failure to file and owing taxes. So filing your annual return late can get you in a world of trouble, and you don't want to be in that world. Okay, very important. So you want to actually be in a situation where you actually avoid an underpayment of estimated tax penalty. Okay, so just be sure to make your payments on time for this tax year. We're speaking about April 15th, June 15th, September 15th, and January 15th. Those are really important. So it's all about just anticipating all the dates and making sure that payments go to the IRS on time, not a problem, so you can avoid all the fees and penalties. Last but not the least, boss, we really have to talk about, you have to prepare if you cannot pay. See, the whole thing is that when we talk about quarterly taxes for a small business, sometimes you don't have the money. Sometimes your cash inflows and cash outflows are like things don't look really good for you. You have more cash outflows than cash inflows. So you're in a situation where you are broke. Basically, you're literally broke, and you need to find money. You need to find the money to pay the IRS. Now, don't panic. It's very important. In rare, you can file for an extension for quarterly taxes. However, in rare cases when the IRS does allow extensions, this generally apply only to the paperwork. An extension will give you more time to file your tax returns, but it will not change the due date for your actual tax payments. Because your quarterly tax deadlines do not necessarily require paperwork, there is no regular extension available. Okay. However, do not hesitate to file for an extension if you need more time to complete your tax return. And so the regular tax return filing deadline is April 15th, but you can easily file an extension to extend your due date 6 months to October 15th. And keep in mind that the IRS may rarely offer broad extensions on quarterly tax payments, but because of the COVID-19 that we had recently, things are really changing a little bit. Okay, so please, if you cannot pay, make sure that you communicate with the IRS. It's very important. You want to communicate because there is a penalty for not paying quarterly taxes. Okay, and it's always important to keep the lines of communication open with the agency so they have a clear idea what's really happening in your life and they can help you out. This is very important. Do not actually miss that. And because again, you have quarterly tax payments, but if your business is not generating enough cash and you don't have enough cash flows to honor your tax obligations, it's just a lot better to work out a payment plan with the IRS. Always communicate with the agency, and you can even hire an expert to help you out. Okay, it's all about having someone to actually talk to the IRS on your behalf, because a certified public accountant, a CPA, an EA, an enrolled agent, or a tax attorney has better ideas. They have better ideas than you do when it comes to the current situation in terms of compliance. So it's always important to reach out to the right expert to help you out. Thank you so much for your attention. I really appreciate it. I was just talking to you about how to do quarterly taxes for a small business. So quickly do a recap here. Know who is required to pay in general. Determine if you have to pay estimated taxes. Determine when to pay. Estimate your tax liability. Determine that you want to decide how you want to pay. Make sure your payments is reflected on irs.gov and get prepared if you cannot pay. Thank you so much for your attention. God bless you. I'll see you next time. But until then, remember, stay marvelous.